One of the most common questions I receive is whether or not the stock market is overvalued at its current price. Let's go ahead and break it down. One way to measure if the market is expensive is by looking at the PE ratio, or the price to earnings ratio. The PE ratio will tell us how much an investor is willing to pay today for a dollar of future earnings. Today, the PE ratio of the S&P 500 currently sits around 27. Growth companies often have a higher PE because investors are willing to pay a higher price today for future earnings growth, while dividend value stocks will typically exhibit a lower PE ratio because what you're buying is a steady stream of expected earnings and future dividends. Historically, the PE ratio of the S&P 500 has sat around 16. If you do the math, that means today, the PE ratio of the market is 70% higher than the long-term average. For the current PE ratio to revert back to its long-term average, one of two scenarios has to play out. The first scenario is a significant increase in companies' earnings, the E in PE ratio. This would bring that number up and bring the PE ratios down. The other option is a significant pullback in the price of shares on the stock market, bringing the P in the PE ratio lower. Today, it's important to note that the S&P 500 is dominated by growth companies, particularly those in the technology sector. There is, however, an equal weight index, which spreads your investment equally across all 500 companies. This index, unlike the market cap weighted index, currently has a PE of around 21, which is still at a 30% premium versus the long-term average for that index. So, should you sell your stocks today? Well, in my opinion, the answer to that is no. But what you should ensure is that the risk you're taking is appropriate for your time horizon. Remember, never keep money that you need in the short term invested in the stock market, regardless of what the PE ratio is. If you have questions about your investment strategy or just need a second opinion, feel free to reach out. Let's make sure that you're on the right path to achieving your financial goals. Thanks for watching, and remember, stay informed, stay confident, and stay disciplined.